Hi, you're watching Market 1 Minute, and we're here with Frank Holmes. Frank, welcome.
Great to be here.
Big news for U.S. Global. Your first ETF, and you choose the airline industry. Tell us why.
Well, Jets has taken off. It's listed on the New York Stock Exchange, and we're very thrilled about it. And a big reason was noticing I fly 100 times a year, what my costs were, all these additional costs. So I started doing some research, and I'm flying up to Vancouver, right nonstop from San Antonio on Alaska Airlines to Seattle, and then come here, and it was a lot cheaper. And I said, wow. And all of a sudden I said, look how much money they're making. So I bought Alaska Airlines. And then I started drilling down saying that there's no ETF covering this space. And I'm a GARP investor, growth at a reasonable price. And I can buy these stocks that in the transport sector at half the valuations that I have to pay for trains or for trucks.
Okay, so you're focused on the airline industry, particularly because of that difference in the valuations. But is the airline industry serve as a hedge, say, on energy prices, on the trends in energy prices, up and down?
It's a great question, because it does. The CEOs and CFOs are different today. They're much better stewards of capital. They hedge. Alaska Airlines, for example, hedges half of their costs every month, rolling out 12 months. Delta bought their own refinery. And Southwest Airlines are very strategic in how they manage their cost structure. But no doubt the drop in the price of oil, they're now resetting at much cheaper prices for fuel. So their margins are expanding rapidly. And if we look at 2014 first quarter, I think the cash flow is estimated $700 million of free cash flow. This quarter, this year, $3.5 billion. I mean, that's a five-fold increase. So that's the positive parts about the industry. Now, previously, they all started undercutting each other, et cetera. Not today. They are buying back their stock. They're increasing their dividend. In fact, the CEO of American Airlines announced 2 weeks ago that all of his compensation was to come in stock.
Wow. Now, you mentioned a few U.S. airlines, North American Airlines. How broad is the sector? How many opportunities can be in that ETF?
In this ETF, there's about 33 names. And the bulk of them are American. 20 names, 1% each, are foreign. So when you go outside of the U.S., you can own airports. So we own the Beijing airport.
Oh, really?
And we pick these stocks based on how strong they are financially. And the number one metric is cash flow return on invested capital and year-over-year growth in revenue per share. And we have 5 factors to screen these stocks. So they get pushed in and pushed out based on financial strength.
Now, do you get into the manufacturers as well, or what other sectors do you get into?
That's another great question, Brian. It's we own Boeing. Boeing has a 6-year wait list to want a new jet.
Wow.
So it would show up, and it's capped at 3%, as long as its financial returns on capital are greater than the Jets.
So you just introduced this ETF. What's the reaction to it so far?
It's been incredible for us. Great experience. We're seeing daily volume. They say that the average daily volume is a couple thousand shares a day, and we're averaging 110,000 shares a day. It's pushed through the almost $40 million in 20 trading days. And after 3 weeks, we have stock options on it. So a broker could turn around and buy this ETF and sell calls against it. And Jets are very volatile.
So they can go long and short.
Long and short, but they're very volatile. So therefore, their premiums are greater for doing cover writing program.
So the symbol again is Jets.
Easy. And if you want to know the index and the model, and we back tested it, you go to JETSX, and that takes you to the index.
Okay. Well, Frank, thank you so much for joining us today. A pleasure as always.
It's great being here.